Well, I wouldn't say markets are necessarily reading it wrong, but I would say as uncomfortable as we are seeing yields at near one-year highs, I don't think that this is going to be the level we see a few months from now. And I think that's more important because ultimately, if yields begin to fall because inflation pressures are easing, or if the job market is a bit softer than expected, it really puts the Fed back in focus. So I guess what I would just say is it's not comfortable to be here at where yields are. I don't think it really breaks markets, but I don't think yields are necessarily moving higher over the next few months.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Fundstrat's Tom Lee discusses why the rise in bond yields might be a false flag for markets. Let's catch him up to uncover his bold insights and market-shaping predictions.
Well, it's particularly uncomfortable, arguably, for small caps. Early last year, probably around this time, you made a bold call on how much small caps could rise. You've moderated from that since. But where do you see small caps going now? Why didn't the big pop that you projected for 24 pan out?
Yeah, small caps have been disappointing. I mean, unfortunately, I think there's been a rug pull on those names a few times, so I think investors are going to be very wary. But to us, I think the roadmap for 2025 is still one where the opportunity for stocks to have much better breadth widens, because not only do we have an incoming administration that is pro-business, and I think it is going to boost CEO confidence. It's pretty evident now, even seeing it in both ISM readings recently. But that's going to be a better environment for mergers. So to me, while small caps have been big laggards, actually for the last 10 years, this 10-year underperformance to the S&P is the worst in actually almost 100 years. So the second only to 1998. And then from a valuation perspective, small caps are still much more attractively valued. The median PE is around 11 times, and that's almost 7.7 turns cheaper than the S&P. So it's been tough, John, to be overweight small caps, but I think they're going to work in 2025.
Bitcoin's price has recently dropped over 8.5% in just 4 days, slipping below the $100,000 mark after briefly reclaiming it earlier this week. This sharp decline has left analysts debating whether Bitcoin has reached a local top and raised questions about how much lower it could potentially fall. The cryptocurrency is now eyeing the $90,000 level, a crucial support zone that could dictate its short-term trajectory. Prominent analysts have suggested that Bitcoin may find a temporary bottom at $90,000, though the possibility of further declines looms. For instance, Alpha PC highlighted in a recent analysis that the price broke through the $97,000, $95,000 range, leaving $90,000 as the next major support. Whether Bitcoin can hold this level or will continue its slide remains uncertain, with areas around $88,600 and $87,500 serving as potential lower targets. Technically, Bitcoin has formed a head and shoulders pattern, which could signal a deeper correction. Veteran trader Peter Brandt believes this formation points to a downside target near $73,000, further supported by other analysts who predict similar levels if Bitcoin fails to maintain support above $90,000. Robert Kiyosaki, renowned author of Rich Dad, Poor Dad, has issued a stern warning about a potential economic collapse by 2025, urging his followers to prepare by stacking Bitcoin. In a recent tweet, Kiyosaki declared that Bitcoin's current price drop is great news because it presents a rare buying opportunity. He emphasized buy low and HODL, underscoring the long-term value of Bitcoin as its total supply is capped at 21 million coins, with fewer than 2 million left to mine. Kiyosaki's economic warnings are not new. Since his 2013 book Rich Dad's Prophecy, he has forecasted a historic stock market crash, a prediction rooted in the aftermath of the 2008 financial crisis. He criticized the decisions made during that time, particularly the Federal Reserve's actions and bankers receiving hefty bonuses while millions of Americans lost their homes and jobs. For Kiyosaki, these missteps laid the groundwork for the looming financial turmoil he predicts. Amid this grim outlook, Kiyosaki views Bitcoin as a safeguard against inflation and economic instability. He argues that its scarcity gives it intrinsic value, unlike traditional currencies. For those who act wisely now, buying Bitcoin during its downturn could lead to significant financial resilience in the turbulent years ahead.
Okay. I do want to get your thoughts on some of the riskier assets or the riskier parts of the market that, or I'll use the word maybe potentially more speculative. Case in point, the quantum computing stocks, they had a huge move higher. Jensen Huang from NVIDIA comes out yesterday, makes comments saying that, some of that supercomputers are still, and the full, realization of supercomputers is still decades away, and you see all the stocks tumble. I know there's one that you like in your granny shots here. I believe it's IonQ. Just want to get your thoughts on what we've seen in some of these parts of the market and how to think about investing, if you should be investing in some of these more speculative or futuristic frontier tech-like companies.
I think investors do need to put a long-term lens on a lot of these important mega themes. I think quantum computing is in the earliest days. I don't think anyone can judge really whether it's 15 years away or 15 months. And I think people have made many mistakes over the past 20 years looking at things like social media and underestimating the adoption rates there, or internet, or even AI now. I mean, just think about 2 years ago, how many people were saying AI was going to actually take far longer than expected. That being said, I do think the environment for stocks hasn't been great for the last 3 weeks. I think it's really gotten people into a recency bias thinking, look, we've near a top, or that stocks are just awful now. I think we're getting close to the point where, you should be betting really and leaning heavily against that. I mean, even look at AI sentiment, it's almost back to negative. But Morgan, regarding quantum specifically, it is a pretty innovative technology. I think these are going to be high volatile names. And so until we get back to risk on, they are going to be tougher names to own, but I don't think that means you have to sit them out in 2025.
Bitcoin investors recently withdrew nearly $570 million from U.S.-listed spot Bitcoin exchange-traded funds, ETF, as the cryptocurrency slumped to $92,500, remaining below the critical $95,000 threshold. On January 8, spot Bitcoin ETF experienced $569.1 million in outflows, marking the second-largest daily net outflow since their launch, according to Farside data. This figure trailed only the December 19 outflows of $671.9 million. The Fidelity Wise Origin Bitcoin Fund alone accounted for 45% of these outflows, losing $258.7 million in a single day, its largest withdrawal ever. The mass sell-off came amid heightened market concerns over the U.S. Federal Reserve's tightening monetary policy, fueled by robust economic data. Ryan Lee, chief analyst at Budget Research, noted that fears of potential interest rate hikes contributed to Bitcoin's dip. Concurrently, the broader crypto market saw $521 million liquidated in 24 hours, further pressuring prices. Despite these developments, market sentiment remains resilient. The Crypto Fear and Greed Index currently registers a greed score of 69, a moderate drop from last month's extreme greed score of 78. Analysts like Don Crypto Trades caution against drawing conclusions from early year volatility, emphasizing Bitcoin's choppy and undecisive start to 2025 as the asset seeks to stabilize. Peter Schiff, CEO of Europac, recently claimed that the U.S. government will not be buying Bitcoin, contradicting promises made by former President Donald Trump during his campaign. Before his historic 2024 election win, Trump pledged to create a national Bitcoin reserve, sparking bullish sentiment across crypto markets. However, the federal government has yet to make any new Bitcoin acquisitions. So far, Trump's approach has been limited to freezing seized Bitcoin assets, including those confiscated from figures like Ross Ulbricht. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.